Hello and welcome to Streetwise Economics Podcast, where we talk about what's going on in the market, particularly in the US, mostly, and to an extent, what's happening in Canada and globally. I am very excited to welcome my colleague, Trusted Money Coach Blooming. Welcome, my friend.
Thank you, buddy. Very excited to be here another Friday to just give our thought on what's going on in the market. It's been a very interesting week so far, and some of the exciting things that has been going on is not just in the stock market alone, but also in crypto. Just give me a moment for me to just quickly share my screen, and this is just to give us an highlight of what has been going on in both the crypto and the stock market. Again, for those of us that have been investing in the market, we are just smiling because we're seeing our portfolio rise. If we look at what has been going on in the stock market, for example, and I say the stock market specifically, the US market, because that's where I invest primarily. For today, when we're doing this recording, the S&P 500 and the Dow is down, but the NASDAQ is ticking up a little bit. But this same week, we saw the S&P 500 and the NASDAQ reach literally almost all-time highs. It's been exciting. Even Nvidia became the most valuable publicly listed company, reaching the $4 trillion milestone. PLTR is still skyrocketing, and even other major companies like Meta, Microsoft, are not even leaving behind Bitcoin. Bitcoin yesterday reached almost 117,000, and as of today, it went as high as $118,000. This again is exciting even as investors, whether you are an equity investor or a crypto investor. I'm telling you that the market is building this momentum, and I'm literally really excited about what the later half of this year is going to give us as investors. But notwithstanding, a lot of things has been going on apart from just the equities market and also the crypto market reaching all-time highs. We're seeing a lot of tariff wars. We can see Canada was slapped with 35%, and also Brazil about 50%. We also saw a lot of countries that also received some tariffs too, some 25%, some 36%. It's been exciting and even a lot of uncertainties in the market. But as an investor, I think that we're literally setting ourselves up for an incredible later half of this year, and I can't wait to see how we're going to end 2025. So over to you, Isaac.
Thank you so much, Coach. It's been a week filled with a lot of activities, and my major take and highlight was that Nvidia managed to surpass the 4 trillion mark in market capitalization, which is almost greater than several countries, African countries combined together in terms of their GDP. And that tells you the opportunity that, technology and AI can potentially create. I remember watching a presentation by Professor Adam Tambara, who is a specialist in that field, and he was talking about the huge opportunities in the artificial intelligence space. And I've been seeing stocks like Palantir, right, going from down as much as $70. I remember you were buying. Now it was trading at $142. So that means effectively your money has doubled. And that's something that is very interesting. Now, in terms of the economy, I think the Federal Open Market Committee, they are signaling that, you know, they, which is a group of, directors who make a decision on interest rates on the monetary policy in the US, that they really want to see, the impact of inflation. But the US economy is very strong. The job numbers are coming up very good. I was seeing on Bloomberg TV as well, Canada added some unexpected job numbers. So what's happening is that when the economy is strong, there may not be need to cut the rates. So the market is pricing in that. But yesterday my uncle and I with my mentor, pretty much, we did take a trade on, we bought the VIX through the leveraged ETF, and today in the morning we cashed out. When I saw when you posted in our group, Trusted Money Coach, on a WhatsApp group when you said the futures are down thanks to President Trump's tariffs on Canada. I knew that today, we were going to cash out some money, and we woke up. Oh boy, we cashed out. So we had a very good, a good day. And now the way that I'm looking at it, usually, like I've said, when people are so excited that stocks are hitting all time high, I become very careful. I don't want to be buying unless maybe when I have a very good average, and in that case I also even wait to buy on a red day, right? But I've seen that this year alone, some characteristics that I've picked out, that have enabled me to be a profitable trader. Investing, I buy and hold for the long term. So I mostly talk about trading. Is just being patient, knowing what stocks to buy, when to buy, and also to make sure that you have a portfolio that is very balanced, because the market does not always go up. I was just mentioning the example of when the market pulled back, I cashed out. So as an investor or a trader, you should be able to make money, whether the market is going up and down. So that's my take. And on lastly, on the tariffs, I think this has been an ongoing thing. Now people termed it the taco Trump, always chickens out. So when I see opportunities like that, when you say something, there is a pullback in the market. But suffice to say, it's very, very important to make sure that you are careful. And like we always say, this is not supposed to be taken as investment advice. Two friends talking about what's happening in the market. And you must always take care of your money, even though for us we do our research. But sometimes I get in knowing when and where I want to get out. So that's why my friend and I, we are developing some courses to share with you, because each person has a unique situation, and then we can do more like one-on-one coaching, not investment advice. Over to you, coach.
Yeah, so again, it's been very, very amazing going from the April lows till now that is July, and we're seeing that the market has been going up. And one of the things that I also want to highlight here, and I'm going to quickly just share my chart here, is sometimes when a lot of people hear about a particular stock, it's so easy for them to just FOMO in. And even as an investor, I could be guilty of this sometimes, but I'm just trying to paint a picture of sometimes when new people come into the market, they might not really understand that even when a stock is going up and people are just saying, oh, I'm making so much money, that should be your own cue to just exit the market, especially if you're not really sure of what is going on with that particular stock, or maybe you just heard about the stock in maybe on the news or something, and you're like, oh, this stock just went up 3,000%, the stock just went up 400% in just 1 month. A lot of people get into that. So I'm just going to quickly share my screen here. I hope I can even pull this because it's not even giving me the opportunity to share the screen that I want to. Just give me one moment as I pull this. So I'm just trying to talk about Bitcoin immersion even before I'm able to pull up the chart. Bitcoin immersion went as high as 3,000% in literally 1 week. And if we go back and just look at that chart, it's been insane. Like literally insane. Today, I think it went as high as 130 something just this past week. And today this thing is trading under $39. Like this is a lot of people got haircut, like literally, like for people that invested maybe $10,000, you're looking at 3,600 right, or 3,900 right now. And it's just remarkable some of the things that the market can just teach us, some things that even when we talk about it, until you experience it, it might not even make sense. So again, I'm just saying I'm still unable to share my screen, and I'm not sure why I'm not able to share my screen. But long story short, it's just saying that a typical example is the Bitmain Immersion, which is an Ethereum treasury company. And again, Tom Lee is a chairman of this, and the hype alone, and I remember seeing this going from $4 to over $100 within the space of just 5 days. So, and a lot of people that got in maybe at 120, 130, now they are holding the bag. So it's just, again, even as much as interesting as the market is right now, people can just FOMO in, which is what a lot of newbies are going to do. But I'm again saying that the best time to buy is when the market retreats, when there's a retracement, when there's a correction. Provided you're already in the stock, then if it goes up, you're excited. But if you're not yet in the stock and it goes all the way up, it's not a good time to buy. That's just what I'm gonna say. But this should not be taken as investment or financial advice. But again, I'm still very bullish about what's still going to happen for the remainder of this year. But even with that, am I buying? I'm only going to buy on when the market corrects. I'm not actively buying right now because I've seen my portfolio go up. The only ones that I'm buying is okay if we have a retracement and I've set my limit orders in place. But aside from that, again, I'm very excited. I'm seeing Bitcoin and Ethereum go up, which is good as an investor. But other than that, I'm just watching my portfolio go up, but I'm not buying. Over to you.
Can I just congratulate you for making a lot of money, my friend? I think I wish people were listening to your course. I remember you spoke about Bitcoin. It retraced, I think, to less than 99,000. Now it hit over 118,000. I don't own any Bitcoin, by the way. I'm also one of those people who is very stubbornly arrogant when it comes to crypto. But at some point, I did, I did some trading, but I want to learn more about something before I can jump in. And I'm comfortable. I'm making money elsewhere in stocks, right? And what I have seen, I was reading an article by the barons indicating that Jimmy Dimon, who is the CEO, I think, or president, CEO of JP Morgan, he was, saying like, the impacts of inflation or the tariffs is most likely going to have an impact on the stocks. It doesn't make sense that stocks are going up. But on that article, there was also another view that he has been wrong most of the time. The point that I'm trying to make is that nobody can predict the market, and he's a very genius, he's a smart person. He manages, I think, the biggest, one of, if not the biggest bank in the world. The last time I heard him speak, he said on a day-to-day basis, JP Morgan handles transactions of about 10 trillion globally. So that we are talking about big league stuff. But again, there are a lot of factors that can come in, whether macroeconomics, company-wide inside information, or let's say if some insiders are buying, it might be perceived as if maybe they know something. But again, the point that we have been consistently shared here is that as long as you understand why you are in a stock, when to buy the stock, and if you know your time horizon, the market does not always go up and down. Who knew when we reached April 9th that we would be at this point where the S&P 500 is hitting all-time high? I would say, very few people. I remember I shared in our WhatsApp group that, there was the Bank of America. And I mean, these are smart people, they have resources. And what I've seen and what I've learned by these big hedge funds and banks is they make money in any case. They don't just take trades or investment positions in one direction. So whether the market is down, maybe they're making money in the currency market. That's why they have different offices in Hong Kong, in China, in Europe, and in different, in bonds, in, in so at the end of the day, for us as retail traders, retail investors, what I've seen is psychology is very, very important. Not to be just easily swayed, knowing what you are investing, and always having an emergent fund, because you don't want to be selling your stocks at the very bottom. So now, as we are about to wrap up, Coach, I wanted to ask you about specifically, do you have some things that you see as potential opportunities, some sectors, some stocks? These are not recommendations, but from what we see, and other risks that you see that maybe our audience can probably just sharing our perspective, not what you should necessarily do.
So over the past 5 years, the US stock market or the equities market in general, as we stood five major black swan events, and I'm going to list them. We had COVID, we had the yen carry trade, we had the interest rate hikes from 2022 to 2024, which is crazy. J Power increased interest rate 13 times, and if we look at how far it increased it from the March lows, which was at 0.25 up to 5.50, that's about 21x. I think in the history of the equities market, I don't think any Fed chair has ever done that before, which is literally insane. 21x from the lows. And even the market was able to survive that. Then we had the trade wars, we had the tariffs. Again, all of this, the market has been able to survive all of this black swan events, so to say. And I'm just saying that as exciting as all of this is, one of the ways that I'm just positioning myself is to just buy on pullbacks. In our last episode, I did mention that I was going to be exiting my Apple stock because I have a few position there. And the reason being that I literally don't see Apple being strategic long term. And for me personally, one of the few criteria that I use to measure what do I want to invest in is if this company is founder led. And for me, Apple is not founder led, and historically companies that are founder led tends to give outsized returns, and that is just my own personal investment strategy. So again, I think by the end of this podcast I would have exited my Apple position because I already set the limit order to just sell. So I'm just saying that that is one of the things that I'm doing. And in terms of the risks is just for people that are still staying on the sideline that don't want to participate in the market. I'm not saying that you should go buy Bitcoin now that Bitcoin is at $118,000. No, that is not what I'm saying. But maybe this might be a good time to just educate yourself about crypto in general. Okay, maybe if this pulls back to 110, if this pulls back to 105, I don't know if that's even going to happen. But even if it doesn't happen, it might just be a good time to start DCAing on pullbacks, not at all time highs. Also, in terms of the equities market is still, I still strongly believe that we're going to end the cycle, I mean, this year, very strongly. That's my own personal belief. But again, what does the risk? The risk here is getting into companies that have already reached all time high and thinking that this is going to go way much higher. We saw that for cycle, not cycle, Cycle. Cycle went as up as almost $300, and within just a few weeks it pulled back to 180 something thousand dollars. So again, we saw the same thing for Bitcoin immersion. These are a series of examples that we're seeing in the stock market, and for those that are not students of the market, that are not paying attention to this, it's very, very easy to get a haircut, meaning that you can lose your money in the stock market. So long story short, this is the time to educate yourself, be a student of the market, and don't be afraid to participate in either the stock and the crypto market. So over to you.
That's awesome. You have heard it from the horse's mouth. I think at the end of the day, I can't add or subtract anything except that, you know, always make sure you subscribe, you ask questions. What are you guys doing in your portfolios? I have learned that the most important thing also is to understand what you are investing, but also to manage your emotions. So don't be too excited, don't be too scared. Educate yourself. Knowledge is power. Until next week, trade and invest wisely. I look forward to talking to you guys in the next episode. Thank you again. Coach, you can say your closing remarks as well.
May the market be in our favors always.